Hey, buddy, this is Bob, a trade genius. Got my good friend Phil here. Hey, guys, sorry about last couple days. I was kind of laid up with a bad knee, but we're back at it again. And what we're going to talk about today is be careful what you wish for. Stay tuned.
Trade Genius.
Okay, Phil, I'm going to throw it over to you. You got some data points here talking about the Fed cuts, and it could be from grim to awful. Go take it away.
You got that right. So, we thought guaranteed we get 25 basis points. The question was, would we get 50? And then all of a sudden, with the last round of data that came in, the market is looking at potentially a 50 basis point cut. If we look at the Fed funds rate probabilities, they're now at 63%. And typically when you start getting up into this threshold of probabilities, it's usually pretty accurate. So, now we're only 2 days out. So having them jump up like this into the meeting, somebody knows something. So it seems like we're going to potentially be looking at a 50 basis point rate cut. Now, if you go on Twitter, they're going to say that's rally time. And I think by and large, that's the case. However, if you look out on the bigger picture, it's not good. And what I mean by that is, if you look at when we have an initial rate cut and you look at whether or not it's a quarter point or a half point, you'll notice that 25 basis point cuts, which occurred in 2019, in 1998 and 1995, had great forward year performance. We had 1 year and 2 year and 3 year were all positive by quite a bit. But if you look at when we have 50 basis point cuts, and the most recent examples are 2001, dot-com bust, and the Great Financial Crisis, which started a rate cut in 2007, we had 50 basis points, and the 1 and 2 year and 3 year outlook on that is very negative, right? So while we may have an initial reaction that's positive, and that's where the blow off top would come in, we keep talking about, after that blow off top, which could extend all the way into maybe the inauguration, for example, then you got to watch out, because next year is not looking good if we do get that 50 basis points. So what we get on Wednesday is massively important. Now, what that looks like on the charts, Bob, here, if we look at the last 250 basis point rate cut examples, you can see where if you zoom in, it's a little bit difficult to see, but if you zoom in, you get an initial sell, right? And that would tie into our September to October sell-off, which is a seasonal thing. In the 2001, our rate cut came in January. In 2007, it came in September, and September 18th exactly, 2007. So coincidence? Maybe not. But we got a rate cut coming September 18th, 2024. So we could have maybe a very initial reaction that's up off of the announcement itself, and then over the next 2 weeks we pull back, and then we get a similar rally like we did in 2008 that finally puts a top into the market for the next 18 months. Then, Bob, you had brought up a chart in terms of like the length of the rate cuts. So this is the last one, and if we are doing another round like 2007, this is going to take us out to Q4, and that goes hand in hand with what the yield curve is saying, because if you take the yield curve where it bottoms and you go out about 120 weeks or so, because that's about the length of time it takes to get through all these rate cuts, that also takes us out to Q4. So the yield curve inversion actually bottomed in agreement with where this is projecting out, which I find very interesting. So like all roads lead to a bear market that really looks for kind of an ugly bottom. It's going to be kind of scary if you're, all in on the stock market long term, but you're probably looking at a pretty gross looking Q4 2025 before the worst is behind us.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Yeah, it's not good. And there's another stat out there too. We have a 0 and 10 that September ends up positive at this point. So you got a lot of things smoking against us here going into the end of the quarter. At this point, Phil, I'm going to take it a month at a time. The market still has not reached the highs, that we had in the summer. And so I'm going to wait on that. But I'm positioned slightly short, speculation wise. I've pretty much closed all my longs as of Friday. We had some tremendous moves here. Bitcoin, I just don't know if it's made up its mind whether it wants to follow the NASDAQ or if it wants to follow its own heart here for as a bank off ramp. So it's going to be interesting to see what it does. I know October is a big month for Bitcoin, so it might be just waiting for its seasonality, Phil. But definitely I'm leaning bearish. TLT's been creeping up by telling people that we may get a slight pullback in TLT because it's basically a sell the news event, but I'd be buying that dip versus worrying about that dip. And then same with gold and silver. We just have to see what the dollar does. Oil is really interesting, is that so many people have front run the oil's demise that it may create a short squeeze in oil when oil should be falling. This is nothing easy trading time, Phil. Literally, it's going to literally be day by day on some of this stuff. I don't think we rely on anything. The derivatives have gone absolutely wild right now.
Yeah. I think, again, I'll go back to the fact they printed so much money. There's so much M2 in the system that the moves are just that much more wilder until they can get that sucked out. And I think also too that we're really not going to see anything in terms of quantitative easing, because I get a lot of sentiment that, oh, they're not going to let the market drop, they're just going to go print. Well, that's because, recently that's what we're used to. COVID printing, that was like a panic smash the print button job. If this is going to be more of a secular bear market where it, kind of draws down, nothing, you're not dealing with like a global credit crisis or catastrophe like COVID was, then you're going to get a secular bear market, which we have not seen for 15 years. There's a whole generation of traders and investors that have 401ks that have not really been through that, now that their 401ks are at a size that matters anyway. And so you're going to see an environment a lot of people aren't used to. So I think you have to recognize when we're in late business cycle, and this ticks all the boxes. Another sentiment that I heard was, well, we had rate cuts in the late 90s and the market zoomed higher. True, but what was the difference? We had falling unemployment rate. Our unemployment rate has recently bottomed and has ticked up, and that trumps everything else. That's what matters. And so I think we're going to continue to see that climb. It always does off of a rounded bottom, Bob. And so I don't think this time is going to be like the late 90s. I think we're going to have another round similar to what we saw in the dot-com bust and the great financial crisis.
Yeah, and one other thing too, Phil, is that at between 7 and 7:15 every morning in September, we're getting some institutional selling, across the board selling. So big money's getting out. TLT's been climbing. So people are hedging themselves here pretty hard. We are really eerily looking a lot like 2008.
Yeah.
It's kind of scary. The only thing we haven't queued yet, we haven't queued in the banking crisis. So wait for that shoe to drop. Well, anyway, guys, we've talked enough about this. It's going to be really interesting. We're going to try to go live on Wednesday, so look for the notification on that. And we'll be back at you guys tomorrow, same time, same place, same bearish story. See you later.
Trade Genius.